And if Bitcoin were to halve, then I'd buy like a 2 or 3x. And so I'd actually bring my cash reserves and I would buy
Okay.
Bitcoin at 30,000.
I,
And like I say, I think there's reasonable odds that you could see it trading 200.
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having an awesome day today. I know it seems like it's been a little bit boring with the Bitcoin price action, but we spoke about a very particular level in my previous video. And actually, if I have a look at the chart at what's going on right now, what we can see is that we actually fell out of this major range up here, right? Now, we said that we had this channel that was supporting us, and you could see we had kind of been in it back here, and then we used it as support up in here. We had a few touches, a couple fake outs, but currently what's happening is we had resistance at the bottom of the range low, and now we're having resistance again at the bottom of this parallel channel. Now, keep in mind, this parallel channel goes way back to the beginning of the year, so the question on everybody's mind is, obviously, is Bitcoin in trouble or should we be worried, right? Because there's something else that we've noticed historically. Now, obviously, history doesn't have to exactly repeat, but you may have gone over to CoinGlass, and what they have is the quarterly returns for Bitcoin. What you find is that ultimately, if you look at the average and median, even though, yes, Bitcoin does have negative quarters, it ultimately, for the most part, produces these positive returns, right? Although the third quarter, as you guys could see, around 5% tends to be the lowest. Now, if we go down into the actual months themselves, unfortunately, you could see that the average and median both for September tend to arguably be the worst month for Bitcoin. So if Bitcoin hasn't been able to rally up until this point, and now we're entering into a historical month for Bitcoin that generally shows negative returns, that is where we start to get that concern, right? Should we be worried that we topped out at 74K? Because if you think about it, if that's the case, then someone who bought 3 years ago at 69,000 had to wait all the way until now only to go from 69K to 74K. Now, we've heard about these diminishing returns, but is that really likely? Is that what's happening this time around? Well, I want to go into some very important things in the charts, and I also want you guys to stick around because there's this video. This came out 3 days ago from David Lin, and he was interviewing Hugh Hendry. Now, he's actually out of a lot of the markets right now, and it was very interesting what he had to say about Bitcoin. So I want to go into the charts and talk about what we're looking at, whether or not we should honestly start getting serious if it is that bear case truly happening, but also make sure you stick around to the end of the video because I want to play this clip and I think it's going to help sort of, I guess you could say, to soothe your mind if you are worried, especially in the longer term view for Bitcoin. Now, I've gone over what I think is happening, but doesn't matter what I think. I'm just a crazy guy on the internet. Let's look at the charts, let's hop in, and let's actually see exactly what is in front of us, all right? And obviously, before we hop into that, I just wanted to remind you guys that today is the last day for the Blowfin bonus for $10,000. If you guys are interested, you can sign up below. It's absolutely free. It doesn't cost you anything. You can trade on a paper account, but if you do make some of these trades, these volumes and deposits, you can get up to $10,000. So the link below, and I will have tutorials popping up above. Now, before we get into the charts, this was something very interesting that Vivek For Real pointed out over on X. And he was basically pointing out what Bitcoin tends to do leading into US elections. And I guess you could say that in a weird way, there is this period of uncertainty. And this is for every election. It doesn't matter who you're voting for or what you think is going to happen. At the end of the day, these elections often tend to be, a little bit uncertain. We don't know what's going to happen. And what you notice is, generally speaking, right around that November area, you start to see the bull market pick up. And you can see this is where we are today compared to our two previous markets. This blue right here is the 2016, 2017, and this green right here is the 2020 into 2021. And what's also interesting, when you kind of just consider Bitcoin's history with October and November, and we go back to these charts, you notice that October tends to be one of Bitcoin's best months. Actually, it is Bitcoin's best month average and median, and we have November being one of its best for the average, right? So again, this would coincide with Q4 being Bitcoin's best, being about an 88% average return with about a 56% median return. And the other thing to consider is, you know, it's exciting when it's exciting, right? When things are going up. It's, I guess, exciting when things are going down, but it's terribly boring when things are doing nothing or going sideways. And unfortunately, you know, if we kind of just go back to these charts, Bitcoin has these very boring sideways moves. And these moves, you know, these take weeks, months, sometimes even up to a year for completion, right? And there are a lot of people that get bored during these times, which is why I haven't been making a lot of videos. There's not really much to go over. Today I have something I want to go over, but, you know, really that's just something that you have to consider. And, you know, like Lark had pointed out, again, while a lot of people are panicking, you know, we're sub 60,000, that's the end, it's a triple top, you know, sell everything, you know, whoever this entity is, this Mr. 100, has been accumulating massive Bitcoin on all of these dips. And what you can see is when we have these very large dips, now, of course, we don't know who this person is, but it, I guess, doesn't really matter who it is, because whoever it is accumulating on these dips. And this entity has bought another 300 Bitcoin. Okay, which now has 72,627. So we don't know if this is an exchange, if this is some kind of a fund, if this is a you know, sovereign wealth fund. Nobody really knows. But it's funny that you're not seeing massive ETF outflows. You're really just seeing a lot of retail panic, and you're seeing these larger accounts, these larger whales accumulating. Just something to consider. Okay, just something to consider. And, you know, Bitcoin has been known for these sort of, you know, 30% pullbacks. But, you know, as you can see right here, if we actually look at this blowfin chart, you know, there is this area of interest down here where we had consolidation before breaking out. And that was right around the $52,000 level. Now, with the exception of this one little dip that we had here on the 5th, we basically haven't revisited that level. So there is that possibility that we may need to retest this area at around 52,000. And honestly, we're not too far off. Now, of course, everything can change. We could break back up, you know, break above these areas, and that's fine. But, you know, it tends to happen when you have this sort of, I suppose, lack of enthusiasm in the markets. You will see these drawn out moments. And that was what we were talking about, was we really had to break and hold above that 61,000, preferably the $64,000 area. We didn't do that last week. And what that had said to me was not necessarily that the bull run is over. And again, guys, this isn't just hopium. I've been very realistic about the targets. You know, we'll get to the targets in a bit, but, you know, people are talking for 250,000, 300,000. You know, we have the conservative Fibonacci of around 102,000. I'll show you why in just a bit. But what could end up happening is something like we've seen previously in the past. Now, we've had the DXY breaking down, right? The lack of confidence in the dollar. In fact, just recently, I don't know if you guys saw this, but Turkey has actually joined the BRICS nations as well. So this is showing there is more of that lack of faith in the dollar. Now, obviously, as a US person, I'm not saying that this is something I'm rooting for, but it is showing that you're getting that decentralization worldwide, right? Countries are moving away from it. So maybe that's why, you know, we're seeing something like this. We're also not seeing as strong of a correlation with the fall of the dollar with a risk asset like Bitcoin. But, you know, for example, there were some people panicking about the dip that the stock market had taken. But if you really just zoom out to the weekly chart, this is the S&P, for example. The S&P is actually holding right now. That was a really sloppy line, but you can see right now it's holding, right? If I zoom in, you can see that where we're having that bounce is on this area. But one of the biggest concerns, you know, is something like an M pattern double top, or if it was to come down and retest the heart line of the uptrend, well, the fact that Bitcoin has not been correlated with the upwards moves of the S&P, but it has been extra correlated with the downwards moves that's where people are getting a little bit worried. But let's hop in and have a look at what's really happening for Bitcoin. So Bitcoin, obviously, if you look at the larger uptrend that started, if you go way back to the bottom, I mean, this is as low as we can possibly go. What we find is that we do have a bear trap here and a giant bull trap up here. Now, obviously, if you just draw some quick lines on this, you could say, hey, this could be a giant bull flag. That's a possibility. It could be that. Something else that we had spoke about was the fact that it could be a descending broadening channel, which actually I'll show you in a bit why. This isn't even the worst that we've seen, and we've seen extremely positive results for those who are patient, but something that is telling me that maybe we're going to go into a little bit more of a sideways and downwards range is if we have a look at the stochastic RSI. Generally, when we get down to these lower levels, what you want to see is this blue line crossing above the orange line, right? And, you know, for example, right here, we had this very deep bottom. We had the blue cross above the orange, and that's basically where we had the massive bottom for the actual bear market. And you can see that this coincides with a lot of other moves here. We had this bottom here, uptick, right? We had this crossing bottom here, and then we started our major uptick. Well, if I zoom into where we are right now, we're struggling. We don't quite have it yet, right? It looks like we are actually crossing back down again. So this suggests that if we have a look at this larger ascending channel right here, that we could potentially come down and retest this area. Now, the logical case would be to retest, if I just show you guys right here, this right here, okay, this area, if you could see this wick where we broke above, this is when the ETF got approved. And that's when we had that massive pullback. In fact, Bitcoin on the ETF news pumped, 16%. And then from there, it fell around 20 to 23%. So that was a pretty volatile time. But if we notice here, we've actually had this crazy, crazy buy wick off the bottom area. So what you could see is a possible retest of that area. But what you really want to see is a constructive pattern. Now, we technically haven't broken this long-term constructive pattern yet. And again, I know we're in a downtrend. I'll get to that in just a minute. But the longer trend from the absolute bottom of this bear market has been putting in higher lows, higher lows, higher lows, higher lows, and we don't know yet, but even if Bitcoin was to come straight down to this channel and stop at around 51,000, it would still be putting in a higher low than the $48,000 area. Now, if we do break that, then we'll have to talk, okay? But we have not done that yet. So, you know, you can try to front run these things. Yeah, you could have sold everything up here. That's possible. I mean, maybe you would have done well if you sold everything up here, you know. But again, there are still some things that tell me that this doesn't make sense really to be the top of the market. Now, here's an example. If we go back and take the Fibonacci, and I'll extend this. This is from the top of 2017 to the bottom in 2018, right? And if we pull that extension across like this, actually, let me pull it over here, right? We just like drag this over, okay? What we see is that we actually came up well above the 1.618, which was only around 29,000, and we peaked at around the 4.236, which was roughly 70,000, so 69, 70, let's just say that's basically where we're at. Well, you can see right now, based off of this Fibonacci extension, we're only just hitting basically around the 1, okay? So that really isn't saying much. I mean, look, if we were to go up to just the 1.618, okay, up to this area, that would put Bitcoin at around $102,000. And at that point, we could say that was a pretty weak market, right? From top to top, we did 45%. But hey, maybe diminishing returns, you know, that's a possibility, right? But if that had happened in the last cycle, then that would have put the last cycle just barely above 20,000 with a high of 29. So I think you could see why this doesn't really make sense for this to happen. And again, another thing, just to throw it out there, I'm going to get back to the TA, but another thing to say is, yes, there's been a lot of things in this bull market that have not happened before, but don't forget that generally speaking, in all of Bitcoin cycles, we've never actually been as high as we've been before because of the ETF excitement. Actually all Bitcoin cycles leading after, you know, the halving, right, is usually a non-event. And then after the halving, we usually see around 160, 180 days, which is kind of where we're getting to right now, is where you start to see that price action begin to attempt to have that takeoff, right? So we got to an all-time high before the halving. So now we've had a sell-off into the area where, believe it or not, we probably would have been anyway. Like, I don't have the charts pulled up right now. If you had said to me, you know, I don't know anything about the ETFs, I don't know anything about an election going on, I don't know anything about any fundamental, any news-driven event, I only know the technical numbers of what Bitcoin tends to do, you know, cyclically on its 4-year cycle, assuming that the 4-year cycle is still intact. I don't want to get into that conversation today, but it could be. It looks like it could be at this point. Then if you asked me where we would be right now, well, I think this is exactly where we would be. Somewhere between 45,000 and 55,000. And we're kind of in that area. In fact, we're slightly above that. So based on just statistically where we would be numerically at this point in the cycle, it's fine. But it feels worse because we pumped so hard so fast and had an all-time high before the halving. It kind of screwed everybody up, right? So, I mean, yes, again, this time things are different, but if we have a look at what we're doing, we are in fact getting right here confirmation on this first time that we're going to have this golden cross since, you know, we fell below it back in October of 2023. And if I zoom in, I don't know if you guys could see that, zooming in right there, the blue is definitely above the pink, which means the 100 is above the 200. And next week, you'll be able to see this a lot clearer. So there is something else. I'm going to talk about this yellow line in a minute, the 50. But another thing we can talk about is this super guppy. Stupid name, but, you know, I do like to look at this. And if you look at the lengths from the times that we have these, and again, you could say diminishing returns or whatever, but cycle lengths tend to be somewhat similar, right? So if we go from this area, from when we got into the green to here, that was about 105 days until Bitcoin got out of the green, and it was about 609 days until we got to the top, right? So 609 days to the top and about 100 until we officially broke in, you know, we officially entered bear market territory. Now, if we start here, of course, we had the COVID crash, a little bit of an outlier. So that was about 672 days to the top, right? So we're still looking at about that 600 day to the top. And then around day 966, we officially, you know, broke out into the downtrend. Now, the reason why this one might have been slightly longer, again, is because of this area right here where we actually went back into the neutral. And I believe had we not had the COVID incident that this probably could have happened a little quicker. And I think this would have just stayed green. This would have been green and we would have never went out of that, right? But we don't really have a black swan you know, scenario happening right now. So, you know, if you just want to kind of look at where we are right now, starting from when we got the confirmation on the guppy to where we are today, that's only 287 days, okay? So just remember, we usually take about 600 days to get to the top. So that's why I'm saying we normally don't see all-time highs this soon, breaking the previous ones, and we generally have more time to go. And we are still in the green, by the way. We haven't broken into any neutral territory yet. So this is why I'm saying patience is ultimately going to pay off in this scenario, right? If we have a look at what's going on with the EMA ribbon right here, you can see that we have fallen back into it. But even though this was a pretty detrimental 50% crash, so could Bitcoin have a 50% crash from the top? I mean, where would that take us? 50% would bring us to about 36,000. Wow, imagine if we went to 36,000. I'm not saying we're going to do that, but what I am saying is back here, we did, only to then end up finding support on the bottom of the ribbon and put in another high, right? So again, there's nothing confirming that we have officially ended this cycle just yet. And another thing to point out, and I have a few, you know, ignore these squiggly lines for right now, but what you guys could see is when we had, which is what I'm saying is a possibility, is this mid-cycle rally where we kind of went up a little bit too fast, and then we started consolidating into this megaphone pattern. Now look at this, guys, putting in lower highs, putting in lower lows, okay? And what we ended up doing was finding that support on the 200 weekly, which, by the way, the reason I don't have more data on this is because this is the Gemini chart, but you can kind of guess, you know, how this was gonna, you know, get support if I extend it. If you look at the BLX chart, you guys could see the rest of it. But just for example purposes, you could see that once we consolidated, what we ended up doing was we were holding support on the 50, and then once we had that breakout, we had one more retest, and then that is when we started the true parabolic phase. So you could argue potentially, and I don't know, I mean, I'm not a crystal ball reader, but maybe this rally right here was a little too exuberant, right? And maybe the ETF rally here leading into it and then after it was a little bit exuberant. And what we're doing is something like this. Now, just for example, this pattern, okay, until we had the official breakout, was about 444 days. This current pattern right here is only currently about 182 days. So that's kind of the point, is these things are boring. They're definitely not fun when you're sitting here, but what you realize is that these are those opportunities while everyone else has left the building, while everyone else has panic sold. You know, these are those opportunities that the smart money, the Mr. 100s of the world, are taking advantage of to accumulate while everyone else is panicking, right? So if we go back over to the chart here, you can see that this 50 moving average has been providing that support. So it's possible we could go sideways for 1, 2, 3, 4, 5, maybe even 6 more weeks, right? Maybe even go lower to that 44 or wick down to the bottom of this, you know, channel again before then having that as support, okay? But until that point, then, you know, you can say we're in a downtrend, but we've been in downtrends like this before and they've ended quite similarly, right? So again, you know, until you start really falling below some of these major averages, specifically at least the 53 area right here, you know, with the lowest possible point being around 47, that is the lowest lavender band of the EMA ribbon, then basically at that point, you know, you pretty much can't actually be frustrated about what's going on. But, you know, here's the thing. If you've been buying Bitcoin since $15,000, right, then you'd have to be up by today. So granted, you wouldn't be selling at the absolute top. But if you're in a position where you're worried or you want to take some chips off the table, fine. That's great. You know, you can always take profits. But just remember that long term, it's more risky to be out of Bitcoin than it is to be in Bitcoin. And that's why I wanted to end sort of with this quick clip from Hugh Henry, who was discussing why he's really not in a lot of the markets right now, but why Bitcoin sort of remains that really good option.
So I can't see that happening. But again, well, with full transparency, I have to tell you that in 1980, the gold market was capitalized at 2 trillion, and the entirety of US equities was 1 trillion. So actually, in 1980, the gold market was twice the value of the total capitalization of stocks. I don't think that, again, happens because we got to that situation, if people remember, stocks had a lost decade in the 1970s. They did nothing, and gold went up 25 times. So we're at a point where I can't see how gold can then go on to rival that metric of being 2 times. I don't see that. But what I do see is the Bitcoin market, and you know, I am not your expert here on, you know, the intricacies of the digital wallets and the whole crusade about, you know, getting away from the government. I'm just saying, when I look at the bull market structure and I look at the size and I look at the people who might buy Bitcoin, um, I can easily see how I can make 3 times my money. The capitalization of Bitcoin, so not all the crypto silly stuff, is just over $1 trillion. So if it was to triple, it's 3 trillion. If gold triples, is kind of, where is it? It's almost $60 trillion. And that's just a big number. That's 60% of global GDP. When gold was last at its bubble high,
Yeah.
you know, 1980, when it was $800, it took gold 28 years to regain, you know, the high price. It was
Yes.
a bubble. But back then, gold was 20%, the capitalization of gold was 20% of global GDP. Okay, so if you will, I think that's a metric. I call that the gold Buffett ratio, the capitalization of gold divided by global GDP. And I know the wide, you know, that the high is 20%. And I come back and I say, well, where is it today? And it's about 16%. So if gold was to match that Buffett ratio, um, gold would reprice to like 3,200, 3,500. So when I look at gold today, and I fear the death of money, um, gold for me is not a life raft. at the present price because I look at it and the central tendency. What do you say? We're at like 2,500, let's say, and it may trade 3,300, but I can see a scenario where, albeit briefly, it might trade 1,700. So it's like it's kind of symmetrical. I'm like, I can make as much as I can lose. Whereas when I look at Bitcoin, that 1 trillion could easily be three. Um, um, so I think Bitcoin could half or triple, quadruple et al. It could trade at least at 200,000. So um, my portfolio today, I I don't have leverage. Okay, number one. I've cut my allocation to the floor. Okay, and then within the portfolio, I have two assets. I own Bitcoin, and I own long dated, when I say long dated, like 2 year expiry leaps or call options on the price of US government bonds.
Mm.
Uh, the term we use is the TLT, the
Hmm.
largest ETFs.
Yes.
That price halved from 180 to like the high 80s, and it's presently more like in the high 90s. That's a trade for me. I think that could trade 150, 160, but I want to get convex or option like explosive returns. And that's why I'm in I'm playing it with options. And we asked about playing options. That's why I'm doing that. Um, and if Bitcoin were to half, then I'd buy like 2 or 3x. And so I'd actually bring my cash reserves and I would buy
Right.
Bitcoin at 30,000. And like I say, I think there's reasonable odds that you could see it trading 200.
So that's it for me today, guys. I know I'm not making as many updates, but what do you want me to talk about? We're really just doing the same thing we've been doing. You know, if I see anything crazy to the downside or anything crazy to the upside, I'll let you guys know. You know, you can follow me over on X if you want, official links below. Also, if you want, you can definitely get that $10,000 Blowfin bonus today. Tomorrow. Tomorrow is the last day, not today. I said today in the beginning. So you guys actually, depending on when you're watching this video, you do have one more day if you want to get in on this. But I recommend just signing up with the link anyway. It's absolutely free. And there's always some kind of bonus going on. You guys can also check out LevX. They're a really great exchange. Meta Signals, they still have their deals going on. All that is below. If you guys do want to learn how to trade, check out these tutorials right here, right now. But yeah, let me know what you guys think. Are you getting bearish? Are you getting bored? Are you accumulating? What are you doing? So I'd love to hear from you guys. Until next time, stay crypto. And of course, peace out.